Are you tired of the 9 to 5 grind? Do you feel like your days are slipping away, spent in a cycle of endless work with little to show for it? Feeling like you're stuck in an endless cycle of waking up, working hard, and not making enough progress towards your financial goals? You're not alone. Many people feel trapped in this routine, yearning for a way out. In this video, I'm going to share with you 10 investments that can help you break free from the rat race and step into financial freedom. Imagine a life where your money works for you, and you have the freedom to pursue your passions. We'll explore a variety of options, from real estate to the stock market, each with its own potential to transform your financial future, and even some less conventional choices like cryptocurrencies and peer-to-peer lending. These innovative investments can offer unique opportunities for growth. Each of these investments has the potential to generate income, grow your wealth, and most importantly, give you back control over your time and your life. Imagine the possibilities when you are no longer bound by the constraints of a traditional job. So, if you're ready to start making your money work for you, instead of working for your money, keep watching. This could be the first step towards a more fulfilling and financially free life. Navigating the stock market can seem daunting at first, but with the right strategies, it can be a powerful tool for financial freedom. Let me share how I started my journey. I began by educating myself on the basics of investing and understanding market trends. It wasn't easy, but persistence paid off. Over time, I developed a keen sense for spotting opportunities and making smart investments. This has been a key factor in my journey to escape the rat race. Chapter 4: The Power of Index Funds. Index funds are a popular choice for investors who seek a balanced approach to the stock market. They offer a simple yet effective way to invest without the need for constant monitoring. These funds aim to replicate the performance of a specific index, like the S&P 500, which means they offer broad market exposure. By mirroring the index, they provide a snapshot of the overall market's health. This reduces the risk associated with individual stocks and often comes with lower fees than actively managed funds. Lower fees mean more of your money stays invested, compounding over time. With index funds, you're investing in a wide array of companies automatically, which spreads out your risk and offers a more stable investment return over time. This diversification is key to minimizing potential losses. It's a set-it-and-forget-it kind of investment, ideal for those who want to grow their wealth steadily without daily management. Over the long term, this passive strategy can lead to significant wealth accumulation, making it a favorite among seasoned and novice investors alike.
Chapter 5: Investing in bonds. Bonds are often seen as a safer alternative to stocks. When you buy a bond, you're essentially lending money to a government or corporation in exchange for regular interest payments until the bond matures. The stability and predictable income from bonds make them an attractive option for conservative investors or those nearing retirement. While the returns on bonds are generally lower than stocks, they offer a buffer during economic downturns, providing a balanced approach to your investment portfolio.
Chapter 6: Mutual Funds Professional Management. Mutual funds are a fantastic way to gain access to a professionally managed portfolio. These funds pool money from many investors to purchase a diversified portfolio of stocks, bonds, or other securities. This means you benefit from the expertise of professional managers who handle the buying and selling of securities, potentially maximizing your returns. Mutual funds are particularly appealing for individuals who want to invest but lack the time or expertise to pick individual stocks or bonds themselves. Plus, the diversity within a mutual fund can significantly reduce your investment risk. Chapter 7: Real Estate Investment Trusts, or REITs. These investment vehicles have become increasingly popular among investors looking for a way to diversify their portfolios. For those interested in real estate but not keen on directly managing properties, REITs offer a compelling alternative. They provide a hands-off approach to real estate investment. REITs are companies that own or finance income-producing real estate across a range of property sectors. This includes commercial properties, residential buildings, and even specialized sectors like healthcare facilities. By investing in a REIT, you're essentially buying shares in a portfolio of properties, enabling you to earn dividends from these assets without the headaches of being a landlord. This means you can enjoy the benefits of property ownership without the day-to-day management. This can be a great way to gain exposure to real estate markets with less capital and less effort, while still benefiting from the potential for income and appreciation. Additionally, REITs often provide liquidity, as they are traded on major stock exchanges, making it easier to buy and sell shares compared to physical properties.
Chapter 8. The Cryptocurrency Frontier. Cryptocurrencies represent one of the most high-risk, high-reward investments you can make today. Digital currencies like Bitcoin and Ethereum have garnered massive attention for their explosive growth and significant volatility. While investing in cryptocurrencies may offer exceptional returns, the market is also prone to dramatic fluctuations. Investors should be prepared for a roller coaster ride and invest only what they can afford to lose. However, for the bold and the tech-savvy, cryptocurrencies can be an exciting addition to a diversified investment portfolio.
Chapter 9. High-yield savings accounts. For those who prioritize safety and stability, high-yield savings accounts offer a secure place to stash your cash while earning interest. While the returns won't be as high as other investments mentioned, the risk is also significantly lower. High-yield savings accounts are an excellent complement to more aggressive investments, providing a liquid, stable foundation for your financial portfolio.
Chapter 10. Entrepreneurship. Starting your own business. Perhaps the ultimate investment you can make is starting your own business. Entrepreneurship is not just about financial returns. It's about pursuing your passion and creating something of your own. The potential for high returns is significant, but so is the risk. However, with careful planning, a solid business model, and persistence, owning a business can be incredibly rewarding. It offers a unique opportunity to achieve financial independence and personal fulfillment, turning your vision into reality.
Chapter 11. Take control of your financial future. Thanks for watching. If you found this video helpful, don't forget to like, subscribe, and hit the notification bell for more tips on achieving financial freedom. Each investment we discussed today holds the promise of helping you escape the rat race and take control of your financial destiny. Remember, the path to financial independence is diverse, and there's no one-size-fits-all solution. Explore your options, consider your risk tolerance and financial goals, and start taking steps towards your financial freedom. See you in the next video.